You're listening to a special episode of Neocash Radio. In the studio with you, it's JJ. Today's special episode features an interview with Eyal Hertzog, the Bancor from the Bancor Protocol. Eyal is a member of the Bancor Foundation Council, and he joins us today. Hi, Eyal. How's it going? Welcome to the show.
Thank you. It's great. It's doing great.
Excellent. So, could you just tell us a little bit about yourself to start out with as we get this interview rolling?
Mm-hmm. So, about myself.
Yeah.
So
just
I'm
a little something.
Yeah, sure. So I born and raised in Israel, and I started coding when I was 7 years old. I'm 43 today, so it's been a while. And I joined the Israeli intelligence.
Okay.
And this is where I actually learned most of what I know about computers and network, and then kind of moved from, joined a startup, then created my own startup. Back in the 90s was Contact.com, was social network. Then I built a startup called Meta Cafe, which was a video sharing site. At one point competing head-to-head with YouTube. And,
wow.
Since 2011, when I first saw Bitcoin, because I was using those video websites, in my space, and I discovered a podcast talking about Bitcoin, that changed my life forever.
Nice. So you basically discovered Bitcoin pretty early on. I mean, 2011. That's back when Bitcoin was, pennies or dollars at that point. And so you've seen Bitcoin sort of evolution over time. What's your sort of thoughts on, being an early Bitcoiner and seeing where it's at now? What are your thoughts on the Bitcoin situation?
So I think that, everyone that got excited about Bitcoin basically got excited about the same reason, but it's sometimes hard to describe it. And because it's like an intuition that there is something really, really great here, and sometimes words cannot do justice with what you're feeling. And I think that, for me, it really was about the creation of the first user-generated currency. That's what I saw. I came from user-generated video, Meta Cafe.
Sure. Yeah.
And when I saw, so I was thinking in those terms, and when I saw that, I said, oh my God, this is a user-generated currency, and it's liquid worldwide with so many exchanges. This is just absolutely amazing, and no one even knows who the user is. Like, someone uploading video to YouTube, and you don't know who that is.
Yeah.
So no one even knows, and if, whenever user-generated entered like a space, then it kind of completely changed the entire space, because it, like YouTube changed video, like blogs changed journalism. So whenever something gets to be user generated, or even Facebook groups that everyone can create, it's really changed the entire ecosystem. So I was looking forward for that change, and it didn't happen so quickly. And the reason that it didn't happen is because while I was looking at a revolutionary technology that enabled something new, enabled for anyone to create a secure currency, which is a revolution, but there was no real good usage. So as an application, Bitcoin was only good for very specific kind of application, like doing illegal stuff.
Right.
Well, the credit card companies are blocking that. So this is where Bitcoin shines, because you can do that with Bitcoin. But if you're looking at the other uses of money, how people use money, when they use it, to buy stuff, or to gift stuff, or even to get a loan, or to give a loan, or to do all those things that people do with money, Bitcoin did not have any real advantage in any of those applications. So as an application, it only succeeded where it provided like a huge benefit, which was mainly doing what is not allowed to. And that includes gambling and ransom and stuff like that, right?
Yeah. Yes,
so,
exactly.
And I was actually, all this time I was working on user-generated currencies in the area of community currency. I was so excited about that concept. With my team that we're still kind of working together, we did a lot of pilots in local currencies that were very successful, and we kind of learned the dynamic of how people use user-generated currency. That's kind
Right.
and we did that for almost 4 years. I would say.
So that led up to the creation of Bancor. You're saying that's sort of what the
So-
state of what we have now.
So those learnings really helped me create Bancor. But the source of that was that Ethereum came, and
Yeah.
Ethereum was almost as big as excitement as I had from Bitcoin, because and it took me a while to kind of realize its true power.
Yeah.
I actually had to only realized it after I started building apps for Ethereum. So how can I expect anyone to realize the power of Ethereum? Because not so many people are building apps on it, right?
Right.
I only got it when I started developing on it. So it's kind of a magic trap that few people kind of are in, if you will. And when we saw Ethereum, we started to figure out that we can solve one of the biggest problems that we have identified in the field of user-generated currencies, and that's liquidity. Liquidity is often, not discussed so much, but liquidity is what connects currencies to each other. If we were local networks, I would say that the liquidity is the internet that connect all the local networks, because local network is useful. You can share files, you can do calendar, you can send emails internally, but how much more useful it is when it's connected to a global network of interconnected networks. That's liquidity. So even though local currency are useful, and there are thousands of examples all around the world, they are disconnected islands because they don't have liquidity to the global network. And liquidity is not 0 and 1. Liquidity can be a range. If you want to think how liquidity is measured, is what is the amount that moves the price, 5% or 10% would be a good question relative to the market cap. So you can actually measure liquidity in terms of how much it moves the price when one converts one store of value to another. And it was a long process of almost 6 months. Within it, we realized that we may have a solution to the problem that people don't think of as a problem, because they say, there's liquidity. People using exchanges, but exchanges are manual. It's like me saying, you can move data between networks. People just need to kind of take a USB drive and move it between the network. You don't need internet. And
right.
It requires labors, and that labors is coming to make profit. All those market makers and traders are providing liquidity in order to make profit. And by using smart contracts and learning and thinking, it's a new state of mind to start. How do you work? How do you build stuff for a global computer? That you deploy code and you don't own that code anymore that you deployed. How you even think about it? That takes time. It's like learning object oriented. It doesn't happen in a day, right?
No, it's all brand new. It's never this is unexplored territory.
Exactly. So while we were thinking and processing it and realizing it step by step, we figure out that you can, by simply having a programmable currency, which is a concept that was never possible before, a programmable currency,
right?
That understand that can manage a reserve, and it can act as its own non-profit automatic market maker. That's what the program, the 40 lines of code, or probably could be, but that's what it does. It holds another currency which is liquid. So, for example, BNT is already deployed. It's the first smart contract, the first smart token, using a smart contract that allow you to buy BNT for Ether or sell or liquidate BNT to Ether. And it's being live since the 22nd, like a month ago, 22nd last month.
Well, let's start there for a second. Let's go back and just briefly touch on the tokens now. Now, you offered a new approach with the hour minimum time. The sale was very popular. The Ethereum network had suffered under the strain, and a lot of people sending in requests. In the end, you collected funding well over the goal, and it was just basically a historic token sale. And I just want to know what it was like at the Bancor headquarters when this was going on, and I'm sure you guys were stressing out over the network, and there was just so many different variables. Just tell me what the human factor was behind the scenes that I don't think makes it to Reddit, but what was it like in your team when that was happening?
So, we were very, very excited. We really felt the momentum in the last 24, 48 hours. This is what we really felt, that there's something going to be here that is meaningful. And then, the time has came. The time has come, and we kind of 5 p.m. Israel time, and I'm looking at the screen with my friend, and almost nothing is happening. Very little comes in, and you start thinking, was that all a dream? Did we imagine that kind of good stuff is happening? Why so little? That was the first kind of feeling in the office. What went wrong?
Right.
And we started, as time went by, we started to get, after 20, 30 minutes, tons of messages and calls from everyone that, we met and told us, oh, you're great, I'm going to participate or whatever. And people are saying, look, it doesn't work. The Ethereum network doesn't work. I'm trying to submit a transaction, it's stuck, it's failed, and we're getting that from all over.
Okay.
And also my Ethereum wallet was working, and in the meantime, our servers are under constant DDoS attack. And at that point, we figure out that the spirit was that we wanted to let everyone that push the button in the first hour to participate, and we realized that the Ethereum network just crashed basically. So we made the extension to 3 hours.
Right.
And after 2.5, little less, little bit more than 2 hours, we started to get a lot of reports that people succeeded in transacting, and we took the decision, that this was enough, because for us, what was important is to allow anyone that followed us, read the blogs, kind of made the decision before the token generation event, made the decision before. We wanted to allow all of these people to participate. That was important. We didn't want money that would kind of follow that money. So people will hear, hey, Bancor raised, I don't know, a lot of money, let's put our money. We didn't want that money because we wanted people that kind of followed the word, the intuition, not the numbers, if you will.
Right.
And that was the intention, and I think we were close because a lot of people did still complain and report to us that they were not able to participate, even though they tried, and we know some of them personally. So it was not 100% inclusive as we hope, but we hope that it was as inclusive as we can, because there were 11,000 participants in 3 hours and 2.5 hours essentially. I think that is
definitely a large number. I mean, if you're looking at token sales just on average, the number of people who will walk away with tokens is a number in about 400 to 500, and so it's much more concentrated in fewer hands that way. But that was one of my takeaways, was that so many people did get a chance to participate in the Bancor token sale, and then you basically had this extra money that you have this buy floor that you built in, so that people are maybe upset with the way things turned out, they can basically get back their through this buy contract at the same price they put it in, or the same ratio.
Right.
And then, but you also mentioned, and people, I'll have a link to that. People can find that. We don't need to talk about that right now. But you mentioned that someone might be able to, or not you specifically, but someone might be able to get a better rate if they were to liquidate it through the BNT token contract itself. Can you just sort of mention how someone would be able to do that? Like, what's the steps for that?
Okay, so it's important to understand price floor is a completely different mechanism. It's something that we came up with because we heard a lot of people claiming that being inclusive makes us greedy.
Right.
And we said, look, we are honestly inclusive. We are not greedy. We don't it's not the reason that we want more money. We want people to let in. So we said, hey, how about that? It was a response to that outcry, if you will.
Sure.
And it was, look, everything above our cap, which was 250. Out of that 50 went to the reserve, to 200 ether. Everything above that amount, not going to us. Obviously, part of it going to the reserve. I'll get to that. But everything, like 80% of that, will go to the price floor, which is a contract that we just buy back the tokens in the price of the token generation event. That's what it does, and it included 117,000 ether after the token generation event. And that is very simple. So what it does is it creates an on-chain buy wall, if you will, of 120,000 ether for a fixed price, which is the price in the token generation event, which was you get 1 ether for 100 BNTs. Okay, so that's one thing. That's the price flow. And if thinking about it, we didn't plan originally for the price flow, but after we did it, we thought to ourselves that maybe we should not time the token generation event, because if you're not getting the money yourself and you're putting it in a price flow that actually protect the investors from not losing money for a large extent, not all of them, but for it gives you a serious firewall. If you do that, so you really can let anyone in, because they probably, as more coming in, more can get out in the initial price. So we would do it differently, but it is what it is.
Yeah.
And the other model is essentially what Bancor protocol is, and that the BNT is not an ERC20 token like every other token. BNT is a smart token, meaning that the token itself, the smart contract that runs the token itself, it has property, it has ether, it holds ether, and because the BNT contract holds ether, it provides an API, if you will, to anyone that uses Ethereum that allows anyone to purchase BNT directly from the token itself, from the smart token itself. Purchase BNT in exchange for Ether, or liquidate BNT and get Ether in return. So, what it means is that this token does not need to be listed in any exchange in order to be liquid, because every time you buy it, the price goes up, and every time you sell it, the price goes down. So there is price discovery going all the time. But it always remains liquid, and not only that it remains liquid, it remains much, much more liquid, measured in how would you move the price when you cash in and out, much more liquid than other tokens in the market that are traded in exchanges. Meaning that if you want to sell an amount of Bancor at the same amount of same comparable token, it will affect the comparable token on exchanges much worse, and in terms of price, than it would be Bancor, because Bancor is now set for a high liquidity. And one of the things that you can do with Bancor, you can set the liquidity. I can actually adjust it to what I think is the best, and that makes it a very unique monetary experiment, because it's the first money that function as its own market maker.
Right. Yes, it's impressive, and it reminds me of the whole Yo Dog, I heard you like tokens, so I put a token inside your token. It's that whole meme. It just works so well. But let me get to Bancor. It's in alpha right now, and you have some updates on your tele. What do you use? What do you use for communication? You don't use Slack. You use Telegram, right?
Yes. I'm also Telegram. Yes.
Okay. So that right now it's in alpha. you have some update. You're basically, there's an update here saying that you are waiting for a green light from legal by the end of the month, and then you're looking to deploy. But obviously, that's flexible. What is there a beta phase that you're planning, or is there, what's the next steps of development for Bancor, and what sort of functionality can we expect in the short term versus some of the long term ideas?
So, Bancor has shipped, I would say, two products in the mainnet until today. The first product that we shipped was our bounty program that we had used, Ethereum ERC20 tokens as the bounty program, and that the whole system used the Bancor platform that you can try out at app.demo.bancor.network. The bounty program was on app.bancor.network because that's the actual app on the mainnet. And we've been using that. It's good to start with using your platform for tokens that are kind of, gameable tokens that are not real money yet. So it's more secure to start this way. And we've launched that and worked with that, and that bounty program is over for now, but we started soon. The second thing that we deployed to the mainnet was the smart token itself, which the first one was BNT. So I would expect several more announcements. Perhaps by the time this show is broadcasted, there will be several announcements of tokens that are using BNT as a reserve because they are also a smart token. So essentially, we guarantee new token liquidity. What we found out is that the token creator is actually very much interested in guaranteed liquidity and relative stability. That is the interest of the token issuer. Sometimes the market would have other preferences, especially those that profit from volatility, but that is not the best interest of the token issuer. And the premise that using smart contracts we can guarantee liquidity and stability to the price of their token, because this price is then translated to all other exchanges through arbitrage. So it cannot be different than the price on any other exchange. So by using Bancor protocol, they guarantee liquidity and stability for the token. And the important thing is that it doesn't matter how small you are. Even if you're creating a token which is kind of a loyalty point in a coffee shop, it can be completely liquid because you don't have this barrier to liquidity that you had until today, when you need to be big enough in order to attract for-profit market makers and traders. So this new situation, maybe opens the long tail of tokens. So this is something that is already working, and since again 22nd of last month, it's already working, and it's working well so far. We may have some improvements, minor improvements, but we're happy with how it works so far. And we're gonna have more tokens being issued as smart tokens, as well as set up the token changer as you mentioned before. So token changer is essentially a solution for existing tokens. That how you kind of activate Bancor protocol on an existing solution, and issuing the smart token is how you can do it for a new token, which have some advantages.
Well, let's talk. The white paper is really interesting, and I really advise anyone that's interested in Bancor to go and read it. But I want to talk about the constant reserve ratio, and I'm really focusing on that for a moment. And yes. What is the constant reserve ratio, and why does it matter?
So the constant reserve ratio is the heart of everything, because the constant reserve ratio means something very simple, that the token is pricing itself essentially, because at any moment it's willing to buy itself or sell itself with no spread. There is slippage, but no spread. and the token is willing to buy itself. And how does it calculate its price? Using the CRR. How so? Very simple to understand. So for example, BNT has reserve in Ether. So it holds right now approximately, I would say, the reserve would be around 80,000 Ether. Okay, something like that.
Is that 10% or is that what percentage of?
10%. It's 10%.
Okay.
Yeah. Now, this means that if it's 10%, then the market cap of the token is, if that's 10%, is 800 Ether. That would be the market cap of the token for the token to calculate its own price. And if that's the market cap, you divide that number by the supply, and you know what is the price per BNT. And this is how the price per BNT is calculated. Now, the reserve is not constant, because whenever someone buying BNT, then the reserve grows. And whenever someone is selling BNT, the reserve shrinks. So because the number of Ether in reserve grows and shrinks, and the price is calculated according to the reserve balance, then it means that the price would be moving up and down based on how many people are buying it versus, how much is being bought versus how much is being sold.
Now, are you talking about the smart token contract?
Yes, the smart token contract is the contract that implements the concept of CRR, the way that the price is calculated. It's a very simple formula to calculate the price. It's basically reserve balance, the price equal reserve balance divided by supply multiplied by the CRR. That's the formula. This is how the price is calculated. It's a very simplistic. And the thing is that, it doesn't matter if you buy 10 times or you buy, I buy 100 tokens in 10 different transactions, or 100 different transactions, or a single transaction, you will get the exact same price. So that's kind of how it works. And this whole calculation, you can be seen in the white paper. Again, it's not rocket science. I was actually, in the lowest group in math. There were like 3 groups, and like the lowest for the dumbest kid, that was my group. So I'm not a math in school, back in school.
Sure, sure.
So I'm not very strong, but it's very simple mathematics, and just a mechanism in order to ensure that no matter where the price moves up and down, how many people buying, how many people selling, the price can move as much as it can. There's always going to be in BNT 10% of the market cap in a very liquid currency, Ether in this case.
Right.
This is always going to be 10% of the market cap in a very liquid, and that what ensures liquidity, constant liquidity for everyone on a high level.
Now, you mentioned token changers as one of the use cases described in the white paper, as well as it's something very, very much in use today. Shapeshift.io does a lot of business, and you're basically saying that with the smart token contract, you can set up your own token changer that does the same thing. But what I want to talk about something different that's really interesting to me is the decentralized token baskets, and that sounds like such an amazing sort of idea. Can you just sort of touch on that for a moment?
Sure. So, first of all, it's just a fun fact. There's no difference between a token changer and this decentralized basket, because it could be a different number of different reserves, because in a token changer you will have 2 reserves. For example, BNT and Gnosis. GNO, BNT and GNO. That could be the 2 reserves. But if you hold the token changer itself, you're actually holding a basket of BNT and GNO. So It's actually the same thing. Now I'll explain how it works. So one of the things that we actually didn't figure out initially when we kind of drafted the Bancor protocol, we didn't figure out that you can use more than a single reserve. we always thought about it as a single reserve. When we started to kind of simulate what happens with multiple reserve, something very interesting happened, because it's, if you have two reserves, and let's say that one reserve is 50% BNT and the other reserve is 50% GNO, so that actually means that you have a total of 100% of the value of the tokens in reserve. Now that is, the very definition of basket. Basket is a token that can worth whatever the other token that it's holding is. That's the essence of what it is. So basically, you can create just a smart token with multiple reserves, and if the total CRR accumulates to be 100, then it means that it is 100% backed, and in that case, it can function as a basket. Now, the way that it works is that whenever someone is buying something or selling something, it changes the price of that specific token. And in that case, it creates an arbitrage opportunity for someone to kind of move liquidity in order to realign the prices with the market prices, which is what arbitrage does today between exchanges. So arbitrage is a very important part of our ecosystem. So because of that, because that no one kind of would leave money on the table, you can be sure that the basket or the token changer would actually reflect the price in the markets, the actual price, the conversion price that is in the open markets. So it's a very different mechanism. It uses a very different ecosystem. When we talked to Gnosis about it, they told us that they were thinking about doing the same thing. and we asked them why. So they told us, look, we thought that would be a great oracle to know prices between different assets. So we think that there's definitely a way here to create a different ecosystem of liquidity, ecosystem that provides in a different way, and we're gonna see how it goes.
Yeah, no, it's definitely a very novel approach, and the fact that we're moving beyond just smart contracts, now the tokens themselves have become more intelligent. I just think that's a natural evolution of this, and maybe we'll just end up using tokens that pretty much do everything one day. But it seems like that's a really good way to decentralize things. It's sort of, you're not so dependent upon so many layers of network in the more token sense. It's just such a small, modular, portable thing. So, where you have a bunch of partnerships listed on your website. I don't want to take up time talking about all of them, but what's the highlights of your partnership? What are you looking forward to with that? And just a brief look at that.
So, as I mentioned earlier, Gnosis is it's a very important partnership for us, because that is probably going to be our first token changer, and we'll have a chance to kind of test out a model that we've been kind of working on and theorizing for a long time. So that's very meaningful for us, this experiment. And the second thing, which is very exciting, is the partnership we have with the Status, that we want to kind of allow Status users to be able to kind of use everything Bancor related. So, issuing tokens, liquid tokens, and using them and sending them and storing. So the entire kind of user interface, both for token issuers and for token users, is something that we look forward to integrate into Status. We are already today a bot, like a chatbot based platform. So we integrated to Telegram and Facebook. Telegram works better actually in that case, and so that's kind of the one that comes to mind immediately. And just a small note about what you said earlier about kind of moving beyond smart contracts to tokens. And you know that tokens are smart contracts. I mean, they are implemented on smart contracts, but they're very simple smart contracts, tokens. Right. And they're so simple that, we had many alternative solution for tokens in a non-smart contract blockchain. But apparently token has become the most important usage of smart token, of smart contracts in our time. That's just what happened. All the tokens out there in the ICO. I mean, Ethereum is becoming a platform for tokens, and I think that what we're trying to do here is saying, let's take this very, very basic token implemented on a smart contract and kind of use the potential that it's running on a smart contract and it can do stuff. And we're trying to teach that token to do more things, hence smart token. And there are like other things that we're planning for in kind of part of that strategy.
I mean, I could see a future usage of a token basically holding some identifying information of yours privately that you can use to verify and little badges, so to speak, and way to, things like that. I think going forward will just bring so much more utility. But okay, let's just to wrap this up here. I really appreciate this time you've given me to talk about all this stuff. What are some of the sort of dream, like looking ahead? Nothing that's actually going to happen. I'm not asking for dates or anything like that, but just sort of what is sort of like your dream goal for the Bancor network and the Bancor protocol, like in the future?
It's very simple. It's very simple and straightforward. And we had multiple examples of that in the past. We have seen our fair share of technology which enabled the user-generated long tail of something. Whether that something, again, was blogs or videos or Facebook groups or subreddits or whatever, or memes. But we had platforms to enable that. And we want to build the platform that enables the long tail of user-generated token, generated currency, to enable this tool. This is a technology, like writing is a technology, currency is a technology, an ancient and very important technology that we've been using for a long time, and now anyone can issue it. That's a new thing.
Right.
And we want to make it very simple, straightforward. The uses that we had on our user-generated tokens were like moms and high school kids. So we know how to build simple user interfaces. We want to make it very simple for anyone to generate a token, and liquidity is the key to do that. So we need a solution for the liquidity that we now have, and now we're looking forward to enable the long tail of user-generated currency. That's to see things that we cannot imagine of how people, because who could imagine how people would use YouTube? Who could imagine how would people use blogs? Who could imagine how would people use Reddit? No one. This is the beauty of human creativity. So I'm looking forward to be surprised.
Yeah, there you go. So where can people find out more information about what you have going on here?
So our website is Bancor.network. There are many videos and interesting material, and I really encourage anyone to check out the demo application at app.demo.bancor.network. It's actually linked from the homepage. It's kind of a nice look toward where we're going. It's actually mobile and desktop friendly. So really looking to get feedbacks about that, and we're gonna have some nice bounties, for audience that looking forward to break stuff.
Excellent. Well, hey, that's part of the process.
Of course.
Well, hey, stay on the line here after this, but thanks so much for joining me. I really appreciate you taking the time out for this interview.
Thank you for having me.
You're listening to Neocash Radio, where we discuss the future of money today. Tune in every Wednesday for our main show, neocashradio.com.